What if I told you that the credit score system, something that controls your ability to buy a home, get a car, start a business, or access basic financial opportunities, now facing the biggest collapse in its history? A system controlled for decades by FICO and the major credit bureaus is now being shaken to its core. And the surprising part is, this entire war began because of one man inside the Trump administration. Bill P., the director of the Federal Housing Finance Agency. Today on Finance Glow, we're breaking down the shocking fight between the government, FICO, and the credit bureaus. A fight so intense that FICO's stock is crashing, the bureaus are panicking. And new rules coming after December 1st, 2025, may permanently destroy the monopoly FICO has held for nearly 40 years. It's a financial earthquake, and you need to understand it because it affects you, your family, your credit, your mortgage, and your future. Before we jump in, hit that subscribe button because nobody breaks down complex financial changes like Finance Glow. This entire battle started when Bill P. posted a series of explosive messages on X, formerly Twitter. In one of them, he wrote, "FICO and other monopolies who have ripped off Americans for decades should not be used." He even said FICO tried to pressure and threaten regulators. Overnight, FICO's stock dropped more than 20%. But that wasn't the only accusation. Bill P. claimed that FICO and the credit bureaus were using lobbyists to retaliate against Trump's administration, trying to push them out because they didn't want the government to challenge their monopoly. Then something even bigger happened. Senator Josh Hawley stepped in. Hawley said FICO has enjoyed a sweetheart deal from the federal government and that their scores are required for most government-backed loans. According to him, FICO used this government power to monopolize the industry, force everyone to buy their scores, raise prices whenever they wanted, and make billions from a system Americans are forced to follow. FICO and the credit bureaus denied everything, saying they're being unfairly targeted. But let's be honest, the timing, the politics, and the financial pressure all lined up perfectly to expose cracks that were already growing. Things exploded even further when one of the biggest changes in mortgage history was announced. Fannie Mae officially removed its minimum credit score requirement. For decades, you needed at least a 620 credit score to qualify for a Fannie Mae-backed mortgage. But now, starting with loan files created on or after November 16, 2025, that requirement is gone, completely eliminated. Instead of judging borrowers by a single number, the new system uses a full risk evaluation, looks at income, credit history, debt levels, cash flow, payment behavior, property details, and overall financial habits. Bill P. even said this is a small underwriting change, but a massive win for consumers. But here's the truth. Even though lenders no longer have a minimum score requirement, your credit score still matters because it can determine your interest rate. A low score could mean a much higher payment, which could still ruin your chances of qualifying. So while the door is opening wider for people with lower credit, the financial impact of a bad score still exists. That's why working on your credit is still essential. Now, the second major shift. Under pressure from the Trump administration, FICO made a shocking move. They cut out the credit bureaus. For the first time ever, FICO will sell its credit scores directly to banks and lenders instead of going through Experian, TransUnion, and Equifax. This broke their decades-long partnership and instantly caused the credit bureau's stock prices to fall. They rely on selling FICO scores to lenders. If FICO doesn't need them anymore, they lose millions. This move exposed how fragile the credit scoring ecosystem really is. The bureaus depended on FICO. FICO depended on the bureaus. But now, when things got tough, they turned against each other. The alliance is falling apart, and the damage is real. What makes this even more dangerous for them is the rise of AI-driven credit scoring. Banks across the country are beginning to adopt modern real-time financial analytics that don't rely on FICO or the bureaus. Chase, one of the biggest banks in the world, is now using Nova Credit's cash flow-based underwriting model. Instead of looking at traditional credit reports, Nova Credit evaluates how you actually manage money in real life. Your spending behavior, bills, deposits, savings patterns, financial consistency, real data, not outdated metrics. Chase also uses their international credit passport system, so immigrants can use their foreign credit in the U.S. that alone threatens billions of dollars that credit bureaus use to earn. And this is just the beginning. Plaid, the company that connects millions of bank accounts to apps, now offers a cash flow-based credit score to banks. These AI models are fast, modern, and far more accurate. They don't need FICO. They don't need the credit bureaus. And this is exactly why the traditional credit system is terrified. Their monopoly is being replaced by technology. But the government wasn't done. Another huge change is coming. Government-backed loans are switching to new scoring models. For years, the government forced lenders to use old FICO models from the early 2000s, FICO 2, 4, and 5. But now, they will use VantageScore 4.0 and FICO 10T instead. This is massive because many people have higher Vantage scores, and FICO 10T uses multi-year trends, not just a snapshot. This means borrowers who consistently pay their bills will look better than they do under the old models. And most importantly, this breaks FICO's monopoly because VantageScore is jointly owned by the credit bureaus, giving lenders more options. All of these changes combine the removal of the 620 requirement, FICO selling directly to lenders AI alternative scoring models, and new government scoring standards are the biggest attacks FICO has ever faced. And the Trump administration is pushing these reforms hard because they believe FICO and the credit bureaus have been abusing their power for decades. So what does all this mean for you? It means the credit world is about to become more flexible, more fair, more inclusive. Millions of Americans who were blocked from home ownership may finally get a chance. Borrowers who were punished by outdated systems may now be evaluated more accurately. People with thin credit files, immigrants, young adults, and those rebuilding credit may finally get approvals banks use to deny. But it also means we are entering an unpredictable period. Old rules are collapsing, new systems are being tested, and the institutions controlling credit for decades are fighting to survive, whether you support these political changes or not. One thing is clear: the future of credit in America will not look like its past. Traditional credit scores are weakening, AI models are rising, political pressure is reshaping everything, and for the first time in history, the dominance of FICO and the credit bureaus is being seriously challenged. If you found this breakdown helpful, make sure to like the video, drop your thoughts in the comments, and subscribe to Finance Glow. This channel is dedicated to giving you clarity in a financial world that's changing faster than ever. Stay informed, stay empowered, and I'll see you in the next video.